Good morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures, downtown Chicago here. It's Wednesday, the day before Thanksgiving. And foremost above all, and happy Thanksgiving to all of us, our loved ones and families. And here's to an excellent holiday tomorrow with everyone and for everybody. Okay, the grain markets, the corn market, our first chart today. You can see if you can see this now, it's not been a good week for corn. You got 5 days of lower highs in the corn market. So certainly in good support. The one positive is the time of year that it is now. Harvest is wrapping up, and seasonally these markets try to rally into the end of the year. Demand is key, exports are key, and we're sort of a little bit tepid here on the demand scenario for corn right here, right now. You know, it's interesting when crude oil is soaring higher, one would think corn and ethanol prices would be going lower. Now crude oil is sold off 20%, so a lot of talk that can the corn markets trade like the crude oil market and hence lower corn prices. But I think the corn market's in really good support here, and I think the downside is limited, so we'll keep talking about that. But demand is so very, very important here. Okay, the soybean market, you can see our next chart of soybeans in pretty good support. You got an inside day, inside yesterday, so we'll kind of see where we go today. The grain markets are closed tomorrow, and they open on Friday morning, 8:30 Central Standard Time, and trade to 12:05 Friday Central Standard Time. I've been doing this all my life, and one thing I've picked up on a strong seasonal is soybeans seem to be higher the day after Thanksgiving just about every single year. So we'll look into that Friday on the half-a-day session. All right, trade wars with China. We started the week off. We weren't on very good footing. Vice President Pence and the Chinese diplomat and slugging it out on these trade wars. And now we got Paul Tudor Jones, a historical Chicago trader here, saying these trade wars have to end. We had Henry Kissinger over there, Hank Paulson, the Secretary-Treasurer back in the day. Boeing, Maersk, the largest shipping container in the world today, saying these trade wars are going to weigh on economic growth in the world today. So we got to get these behind us here and move forward. Certainly January soybeans, we need to get above 9 and then above 906, and I think that's what's going to happen here in the weeks ahead. A little bit about China too now. Their milk imports have increased 15 to 20% in the last year, and we're cut off from their milk market as well. So as our dairy prices are suppressed, here's another market. If we could open up and export our milk to China, that'd be a big positive here, but certainly soybeans, milk, cranberries affects a lot of the different trades here. So, and then the wheat market here, you can see into good support. A lot of talk that perhaps wheat is bottoming here, and I think a good play is to buy wheat at lower prices and look for exports to pick up here from the rest of the world. Everybody have an excellent weekend coming up. Thank you.